Hi, this is Zach Meir from Master Investor with a look at some bulletin board hero stocks on Monday, the 11th of May. And I'm starting off with IGas Energy, where you can see that we're in the aftermath of an extended bull flag along and above the 50-day moving average of 26.68 pence. That's shown here in blue. There's been an extended support line here in the RSI window from the end of January, multi-tested and looking encouraging, especially with the 50 plus readings that we've had for most of May to date, and then the break of initial April resistance, or actually April resistance at 31.75. Above that, we're looking for further gains or accelerated gains for the shares, and a target which could actually be quite surprising on the upside, or quite helpful to the bulls anyway, towards 50 pence, which would be at the top of this rising December price channel. Stop loss, well, the first warning sign would obviously be back below 31.75 last month's peak, but probably the best one at this stage, the 20-day moving average at 28.4 pence. That's shown there in grey, and that should be trailed behind the position, but plenty of upside seems to be on the cards there. Returning to Kalimantan, which we were looking at just a few days ago, I think here some progress in terms of a weekly close above the 200-day moving average. That's the black line shown here at 1.38 pence. Looking for a return to the top of the range from October, 2.5 pence plus. Stop loss probably an end of day close now back below the 200-day line at 1.38. If you're fussy, maybe a little bit lower than that, towards the 50-day line, 1.25, but the 200-day line looks to be, or should work as support for the shares, especially now that it's starting to rise, so that is encouraging over the near term. Next up, Metminco, one of those stocks that's sort of bubbling towards, or bouncing along the bottom in terms of the recent range. A nice hammer candle on Thursday, and then the push higher through the 50-day moving average shown here in blue, 0.27 pence. So a weekly close above that feature. It's also got a nice RSI profile there, break of the 50 level, which was double resistance for April and early May. So that is encouraging too. So looking towards perhaps 0.4 or 0.45 pence over the next 2 to 4 weeks for the share. Stop loss probably back below the 20-day average, 0.25 pence in the first instance, or if you can afford it, maybe towards this 0.23 level, which is the notional floor of this rising February price channel. Next up is a stock called Proton Power Systems. I haven't looked at this before, but we've had the break up through the 50-day moving average of 3.45 pence on Thursday, and then this quite substantial unfilled gap to the upside, which is really retesting February resistance of 4.5 pence. I'm looking for an eventual target here as high as let's say 6 pence, which would be the top of this October price channel. The only problem at the moment is that the RSI is extremely overbought. Ideally, we'd get dips towards the floor of this gap at 3.75 pence to buy into, with the stop loss at the 50-day moving average at 3.45 pence. So maybe let the shares cool off if they do, if they give you the chance, and then target as high as 6 pence. Stellar Diamonds looking encouraging at the moment. We've had this sort of basing here and a bear trap rebound from below the initial April support, 0.72 pence, and really while above that, one would be looking for a return towards the 1.3, 1.4 pence resistance of the autumn. Stop loss, the 20-day moving average, 0.74 pence, looks to be quite helpful, especially as it sort of ties in with the April support, the old April support as well. So bear trap rebound for Stellar Diamonds seems to be in play there. And then finally, Tethys Petroleum, stock which delivered a much higher low for May versus April. Decent divergence in the RSI window as well, and the break of RSI 50 after this double resistance around that level as well for the end of the week. Target initially towards, well, hopefully towards 10 pence plus. Be cautious on the shares, maybe wait on an end of day close about the 50-day moving average at 6.58 pence. And the stop loss on the buy argument at the moment back below the 20-day moving average, 4.78 pence. Any dips towards the 20-day line currently regarded as a buying opportunity for aggressive traders. That's it for me. More updates at zaxtraderscafe.com.